Welcome back to AI Crypto Pulse, your premier destination for the most accurate, real-time market intelligence, institutional-grade technical analysis, and comprehensive digital asset news available anywhere on the internet today. We have an absolutely explosive market update for you right now, diving deep into the highly anticipated price prediction for XRP, where a massive breakout could literally be loading as we speak. If you have been watching the charts over the past few weeks, you know that Ripple's native digital asset is rapidly approaching a crucial turning point. The price action is aggressively tightening within a major macro consolidation range, which is completely fueling widespread speculation across the entire financial sector that a monumental breakout could be just around the corner. With underlying bullish momentum slowly but surely building beneath the surface, top-tier analysts across the industry believe that a decisive, high-volume move above the critical $1.50 resistance level could ultimately ignite a powerful, face-melting rally towards significantly higher targets in the coming trading sessions. To truly comprehend the sheer magnitude of what is currently unfolding on the XRP charts, we must first analyze the deep psychological factors and the complex market structure dictating this highly compressed environment. For months, retail investors and massive institutional trading desks alike have been locked in a fierce, high-stakes battle over the future direction of this controversial yet profoundly resilient digital asset. This prolonged period of sideways chop has created a massive pressure cooker scenario, where billions of dollars in speculative capital are just waiting on the sidelines for a definitive signal to deploy. Every single time the price has attempted to break out of this massive structural range, heavy localized selling pressure has aggressively swatted it back down, creating an incredibly frustrating environment for long-term holders. However, veteran market participants completely understand that this exact type of prolonged, exhausting sideways price action is historically the absolute perfect breeding ground for massive, parabolic market movements that catch the vast majority of retail traders completely off guard. When we start pulling up the technical indicators and looking closely at the higher time frame data, the bullish narrative surrounding this impending breakout becomes mathematically undeniable. One of the most respected voices in the entire digital asset space, crypto analyst Ali Charts, recently released a highly detailed market report completely reinforcing the idea that XRP may finally be on the absolute verge of a major, trend-defining breakout move. According to his comprehensive technical breakdown, the overall volatility of the asset is continuing to tighten aggressively across multiple higher timeframes, creating a coiled spring effect that simply cannot be contained forever. Specifically, Ali points directly to the Bollinger Bands on the 3-day technical chart, which are currently experiencing their absolute tightest squeeze in more than an entire calendar year. In the world of professional technical analysis, this specific condition is a massive flashing siren that almost always precedes a sudden, violent expansion in both market volatility and directional price action. For those who might be somewhat new to reading technical indicators, it is critically important to fully understand exactly what a Bollinger Band squeeze represents in the context of a macro market cycle. This powerful indicator visually tracks the standard deviation of an asset's price, expanding when the market is highly volatile and aggressively contracting when the market enters a period of extreme, quiet consolidation. When these upper and lower bands pinch closely together, exactly as they are doing right now on the XRP 3-day chart, it mathematically confirms that the asset has reached an extreme point of energy compression. The market is essentially taking a massive, deep breath, storing up an incredible amount of kinetic trading energy before unleashing a massive wave of capital in one specific direction. The fact that we are currently witnessing the tightest squeeze in over a year strongly suggests that whatever move happens next will likely dictate the entire trend of XRP for the remaining duration of this current bull cycle. However, despite this rapidly growing anticipation and the visually striking technical setup, professional analysts are urging extreme caution for anyone looking to blindly gamble on the immediate short-term direction. Ali expressly described this current structural setup as a highly dangerous, no-trade zone, issuing a stark warning to both retail traders and leveraged speculators across the ecosystem. He strongly emphasized that traders should absolutely avoid taking any premature, heavily leveraged positions until the broader market officially confirms its next true direction with a clean, undeniable breakout above or below the established macro boundaries. Trying to front-run a move of this expected magnitude is a classic amateur mistake that frequently leads to devastating portfolio liquidations, as market makers will often execute violent fake-out wicks in both directions, specifically designed to trigger stop losses and flush out weak hands. In this heavily manipulated environment, raw patience is your absolute greatest weapon, and waiting for undeniable, high-volume confirmation is the only guaranteed way to survive the coming storm. So, what exactly does that undeniable confirmation look like for the bulls who are patiently waiting to deploy their sideline capital into this massive setup? The prominent analyst has made it perfectly clear that he is currently watching two highly specific, critical price levels to dictate his next strategic maneuver. On the bullish side of the equation, the absolute most important number to monitor on your screens right now is the major resistance zone sitting directly at the $1.50 mark. To officially trigger the next phase of the bull market, XRP does not just need to spike briefly above this line. It desperately needs to secure a clean, structural 3-day candlestick close completely above this $1.50 barrier. Achieving this specific technical milestone would essentially flip a massive multi-month ceiling into a rock-solid floor of foundational support, entirely validating the bullish breakout thesis and officially signaling that institutional buyers have firmly regained control of the macro momentum. If the bulls can successfully coordinate their massive capital inflows and actually achieve that highly coveted 3-day close above the critical $1.50 resistance line, the upside potential becomes absolutely staggering. According to the technical projections laid out by Alley charts, a confirmed breakout of this magnitude would instantaneously trigger a massive upside rally, sending shockwaves of pure FOMO throughout the entire digital asset landscape. His absolute primary technical target for this specific explosive move sits incredibly high, targeting the highly lucrative $1.80 region in the immediate short to medium term. Hitting that specific target would not only represent a massive percentage gain from the current consolidation levels, but it would also definitively prove to the broader financial world that XRP has officially decoupled from the sluggish, sideways price action that has plagued it for so long. This kind of violent upward trajectory is exactly what the incredibly loyal XRP community has been patiently waiting for, and the technical charts are finally aligning to make it a distinct mathematical possibility. But as any veteran trader will aggressively remind you, every single technical setup carries a significant element of downside risk that absolutely must be managed with cold, calculated precision. While the bullish Bollinger Band squeeze looks incredibly promising on the surface, Ali also issued a very stark, sobering warning regarding the absolute worst-case scenario for Ripple's native token. On the downside, the analyst pointed to the crucial support floor located at the $1.29 mark as the absolute ultimate line in the sand for the bulls. If the overall macroeconomic environment suddenly sours, or if institutional selling pressure suddenly overwhelms the global order books, a structural close completely below this $1.29 level would completely devastate the current bullish narrative. Losing that critical level would immediately invalidate the upside breakout thesis, mathematically weakening the foundational structure of the asset and significantly increasing the terrifying probability of a much deeper, more painful market correction in the days ahead. If that bearish scenario unfortunately plays out, and the bears manage to violently drag the price action completely below that vital $1.29 support floor, things could get very ugly very quickly. The analysts specifically stressed that losing this zone would expose the entire XRP ecosystem to a cascading wave of long liquidations, rapidly accelerating the downward momentum as algorithmic trading bots automatically dump their heavy bags. This sudden flush of liquidity would likely drag the asset all the way down toward the massive psychological support zone, resting directly at the incredibly important $1 flat level. Testing the $1 mark would be an absolute nightmare scenario for retail investors who recently bought the top, but it would completely reset the macro structure of the chart. Because the risks are currently this incredibly high, Ali reiterated that extreme patience remains crucial in this environment, specifically noting that simply waiting for the Bollinger Bands to officially break before entering any trades offers a vastly superior risk-to-reward opportunity. To gain a fully comprehensive 360-degree view of this complex market situation, we also have to examine the data being presented by other top-tier analytical minds in the cryptocurrency community. The team over at More Crypto Online recently provided their own incredibly detailed technical assessment of XRP, perfectly complementing the Bollinger Bands squeeze thesis with classical chart pattern recognition. According to their extensive market analysis, XRP is currently navigating its way through a massive, highly complex, broad corrective triangle structure following a recently failed, highly disappointing attempt at an upside breakout. This specific geometric pattern indicates a severe lack of directional conviction from both buyers and sellers, resulting in a frustratingly slow, grinding price action that completely lacks any necessary aggressive, impulsive characteristics. They explicitly suggested that because of this structural weakness, the digital asset currently remains firmly locked within a very wide, utterly range-bound environment, and it may stay trapped inside this triangle for the foreseeable immediate future. Understanding the deep structural mechanics of this broad corrective triangle is absolutely essential for anyone trying to perfectly time their entry into this highly volatile market ecosystem. The preferred technical scenario laid out by More Crypto Online actually allows for the continued, agonizingly slow development of this larger triangle formation over the next several trading sessions. While this might sound incredibly boring to the high-leverage day traders looking for immediate, explosive gratification, this prolonged consolidation phase is technically incredibly healthy for the long-term sustainability of the asset. This extended sideways chop may eventually provide the exact foundational support needed to launch another massive move higher, acting as the fundamental launchpad for a developing C-wave impulse. In Elliott wave theory, this highly anticipated C-wave is often the most aggressive and profitable leg of the entire market cycle, meaning that this current period of extreme boredom could simply be the quietest moment right before the absolute most violent financial storm hits the charts. However, if this anticipated C-wave is going to successfully materialize and drive the price action into the stratosphere, the bulls are going to have to fight through a massive, heavily fortified wall of institutional supply. The analytical team clearly highlighted several primary resistance clusters that are currently acting as massive, impenetrable ceilings for any potential upward price movement. These critical supply zones are strategically located at the $1.55 mark, the $1.60 psychological barrier, and finally, the ultimate boss-level resistance sitting at $1.66. Each one of these specific price points represents a historical battleground where heavy bag holders are eagerly waiting to dump their massive positions and simply break even on their long-term underwater investments. In order to truly ignite a parabolic, trend-defining rally, the sheer volume of organic buying pressure must completely overwhelm and obliterate all three of these resistance clusters in rapid, undeniably aggressive succession. Conversely, we must also completely analyze the structural integrity of this massive triangle formation to understand exactly where the entire bullish narrative completely falls apart. According to the technical charts provided by More Crypto Online, the fundamental strength of this geometric pattern weakens incredibly significantly should the overall price action violently breach the absolute critical support threshold located at $1.28. This specific number aligns almost perfectly with the bearish invalidation level previously mentioned by Ali charts, proving that multiple independent analysts are all watching the exact same critical liquidity zones. Before reaching that absolute disastrous level, the bulls do have a minor secondary line of defense, with the next immediate support level hovering right around the $1.30 region. But if that psychological support completely fails to hold the line, the market will instantly shift into an aggressive defensive posture, and traders will rapidly scramble to protect whatever remaining capital they have left in their portfolios. If the $1.28 floor completely gives way to the relentless selling pressure, the charts indicate a terrifying plunge into a much deeper, highly illiquid market environment. Below that specific threshold, the only thing stopping XRP from absolute freefall is a massive, incredibly deep liquidity zone situated completely between the $1.26 mark all the way down to the $1.16 area. This incredibly wide pocket of historical price action currently serves as the absolute ultimate macro range support, acting as a massive safety net constructed by long-term institutional buyers. If the price manages to flush all the way down into this specific zone, it will completely reset the entire technical structure of the asset, shaking out millions of weak retail hands and creating a brand new accumulation phase for the smart money whales. Surviving a drop of that magnitude requires a cast iron stomach, which is exactly why managing your downside risk right now is absolutely paramount. As we bring all of this massive institutional-grade data together for today's comprehensive market broadcast, the absolute bottom line for XRP is that it continues to oscillate wildly within this highly dangerous, incredibly unpredictable corrective range. While a massive, fast-paced upside extension toward the $1.80 region remains a distinct, mathematically probable possibility, the broader market has yet to demonstrate a convincing, undeniably impulsive breakout in either direction. The energy is aggressively compressing, the Bollinger Bands are completely squeezing to historic levels, and the entire digital asset ecosystem is holding its collective breath, waiting to see which side of the order book will ultimately break first. Nonetheless, the absolute burden of proof right now rests entirely with the bulls to step up to the plate, bring the massive volume, and definitively initiate a massive trend shift directly above the current heavy resistance levels. Stay strapped in, keep your alerts set tight, and make sure you absolutely smash that subscribe button to AI Crypto Pulse so you never miss another critical, market-moving update.